Welcome to the FinRe Reinsurance podcast. And today we are so honored and privileged to be hosting Counsel Naomie Pilula, Manager Legal Services at Pensions and Insurance Authority. Welcome, Counsel Naomie.
Thank you so much, and thank you for having me.
We are glad that you have joined us today as we delve deep into some of the key regulations that were enacted and gazetted last year, as of 2020-25.
Yes.
And I must imagine that 2025 was a busy year for you.
Very, very busy, especially the end.
Especially the end.
Yes.
Yeah, because I know there was the gazetting of the micro insurance regulations, and then the market conduct, and then there was a big one.
The tribunal rules.
And the reinsurance
regulations.
Why
we're here, yes.
Yeah, which I think from our end, I think it's a big win.
Yes.
For the insurance industry in Zambia.
Definitely.
Because it changes the landscape and also helps us to build in terms of the local market, the Zambian market, which has been the drive for the regulator for a while, and it's been a cry. So I think that one it's a good one.
It is.
So in today's conversation, we focus largely on the reinsurance regulations, which is SI 72 of 2025, which was issued, I think, enacted, I think November
the 14th.
Yes. Yeah. No wonder it was busy
Yes.
For you. Yeah. And for today, just to get us starting with around the reinsurance regulations, what's the major intent behind this regulation from PIA, from a legal perspective?
I would say, firstly, it's not so much the intent coming from PIA, it's policy.
Okay.
As the regulator, we do implement the policy directions coming through from the government, through the Ministry of Finance, who we are under. So when it comes to the reinsurance regulations, I think the main drive can be spoken in two main legs.
Okay.
The first one would be around promotion of local sessions.
Okay.
So we have noticed for quite a long time that a lot of insurance premiums get lost.
Okay.
In terms of them being seated outside of the Republic. Okay. So one of the biggest concerns that government has is capital flight through those premiums being seated outside of the Republic. You may recall a couple of years there was a requirement for withholding tax for reinsurance that is seated outside of the Republic. That was a intervention that government tried to do again to basically mitigate the capital flight. That wasn't very effective. It also wasn't very practical for business. Yeah. And so this regulation has come in as another intervention measure to say that, what would it look like if we required certain classes of reinsurance business or insurance business to be seated within the Republic, make it mandatory. And let's ensure that as you mentioned, it's a great win in terms of growing capacity, even risk capacity within the country. And so if we were to able to exhaust the capacity that we have before reinsuring outside of the Republic, it would end up strengthening our own local industry. So that's the one leg of the intent. The other leg is also in terms of the financial security of the insurers, in terms of ensuring that the entities that they do end up reinsuring with, even if they do go outside, have got a certain rating. So we're protecting the funds, we're ensuring that should anything happen, they're still going to get that payment coming through. And so just creating more stability within the market in that direction. Interesting.
Thank you so much, Counsel, for that highlight. I think it's quite critical. Like you have hinted. I think in the past, as of 2024, there was so much siphoning out. You see a lot of premiums are going out.
Yes.
But I think with this one on board, it will really help us, and also just generally the economy in itself. I think it's a great win. So far, how has been the market's reaction?
We mostly positive. We have received positive responses. Obviously, from the reinsurance companies, very positive. but also from the insurance companies, because it gives more direction in terms of what does promotion of local sessions look like. Obviously, there's no law in the country that will ever have 100% positive feedback.
Yeah.
But even with the negative feedback, it's been one that, like any piece of legislation, you let it rest, let it settle, let us use it for a while before we can start touching on it. Yeah.
Great. I can only imagine how it is on the ground there. But thank you so much for that clarity.
Yeah.
And as PIA this year in 2026, looking ahead to firm up the same, what have we put in place, planning to put in place to help insurers and reinsurers to comply with this? Any clinics, workshops?
So there are some clinics and workshops coming up. Our main administrative assistance in terms of implementing these regulations come in form of the creation of a master slip.
Okay.
So as earlier mentioned, the purpose of the regulations, or one of the purposes of the regulations, is promotion of local sessions.
Okay.
An entity has to prove that they have exhausted the local capacity before they reinsure outside of the Republic. And that can be a very, an administrative nightmare. To go from one entity to the next to the next.
Yes.
And also for the authority, how can we be sure that you have looked around within the Republic? So a solution that is being worked on with the assistance of the Reinsurance Council, which is part of the councils of the Insurers Association of Zambia, to come up with a master slip, starting off with it being a little bit more paperwork, but looking to digitize it as the year progresses, where entities can fill in their information and the slip can go around and the authority can have access to that slip. So for verification, we'll know that the shopping has been done.
Okay.
And also it's easier to get those responses from the reinsurers, because the reinsurer is always within their power to refuse to take on a risk. So even that has to be documented, and it's easier if it's done in a very standardized process throughout. So looking at getting that introduced, and once it's introduced, then the regulations will be more smooth sailing. Excellent.
That sounds good. That sounds good, because I think the market is huge. Just from the general insurance side, I think there are over 20.
Yes, they are.
20 players, 21, 22, about there.
Yeah.
So I think that will become critical, and it's an interesting one. And just to move from there also, as all this is happening, I think there's a key stakeholder who cannot be forgotten. That's the board.
Yes.
So how much accountability is being placed on the board with regards to implementing this regulation?
I think when it comes to the board, it's around ensuring that the underwriting procedures are updated. Looking at how does a risk get undertaken, because part of the reasons why reinsurers don't take up certain risks is because they are not in agreement with the underwriting that took place primarily. So they're ensuring that their underwriting mechanisms are actually following best practices. Also looking at reshuffling of the reinsurance programs. Who's catering to their reinsurance? With the fact that the regulations came out in November of last year, the authority did take into consideration the fact that a lot of the reinsurance programs had already been negotiated for the year 2026.
Yes.
And so we did not, we took that into consideration, we're cognizant of that, and we said that, okay, for the year 2026, the reinsurance programs don't have to necessarily follow the requirements and the regulations. But anything facultative automatically follows the regulations. And so if it looks like reorganizing the reinsurance programs, how you go about determining who is a reinsurer also needs to be adjusted, because like I said, we've introduced requirements in terms of ratings of the reinsurers. And so that becomes a factor. The rating of the reinsurer also becomes a factor when it comes to capital adequacy. You may be aware that the capital adequacy transition period came to an end at the end of last year. And so now it really matters.
Yeah, it does.
The rating of the reinsurer. So even though the regulations provide for a minimum rating, it's cheaper in terms of capital for you to go to a higher rating reinsurer in terms of not having a capital charge or a less capital charge on a higher rating reinsurer. But also in the sense of issues to do with fronting.
Yeah.
The regulations have come in to prohibit fronting. So fronting has been defined as taking on a risk or at least refusing to carry a risk of more than less than 10%. So the primary insurer is required to at least hold 10% of the risk that they have undertaken, and the rest can be reinsured. Or even if you're using alternative reinsurance, you can also, it also has that limitation of you carrying at least 10%. So what are the boards of the reinsurers doing to ensure that some of their practices that may have been utilized before that are now prohibited, how are you mitigating those factors and ensuring that business still carries on even if those changes are made?
Okay. Excellent stuff. I like it when you say that for the programs that we already signed, that's a good one on the regulator with regards to the flexibility that has been shown by PIA. Because I think it was one of those headaches that insurance players will talk about and the like. I think that being taken out of. So in this case, that would be a compliance that for treaty, that would be 2027, right?
Yes.
Okay. So we should be preparing ourselves for 2027.
Yes.
And everything that is coming up.
Yeah.
In the past, I note that like reinsurance per se, there was no specific guide in terms of templates, how they can submit quarterly returns.
Yes.
Has the regulator made any headways in that space?
So first and foremost, the submission of reinsurance programs now has a standardized form. So the regulations have provided a standardized form for the submission of the reinsurance programs in the sense that there's certain information from the programs that we require. And so that has been standardized. So that's very helpful for the industry. Our returns, we have worked on basically our returns based on the new act. Those regulations should be coming out in 2026. They're already sitting with Justice and we have already reviewed the final copy. So we're literally just waiting for them to be released for the minister to sign. And so that will give guidance because those regulations really split up the returns according to the entity. Reinsurance is still similar in terms of general and long term. So it really does depend on the what is the majority of your business in terms of which return you end up filling in. But it gives a lot more guidance because it's based on the new legislation as opposed to the returns you're currently using, which are still based on the 1997 Act.
Great. As it is said, any new regulation poses new risks to the industry. And from a regulator's perspective and legal services perspective, what are some of the risks that you think this regulation poses to insurance players across the Zambian market?
With any new piece of legislation that comes in, the biggest risk is obviously compliance. So what are the insurance companies doing to ensure that, like I mentioned, the regulator was flexible in terms of 2026 reinsurance programs and ensuring that, okay, you can walk along with them. But there would be very little excuse that would be condoned if you're coming back with a program in 2027 that is not conformed to the regulations. It's also, there are certain questions that the regulator has in terms of, for example, motor. There are basically 6 lines of insurance business that are required to be reinsured within the Republic without excuse, unless the capacity has been exhausted. So there were certain questions that the regulator has in terms of motor. Why are you reinsuring your whole motor business?
Interesting.
Even as an insurer, isn't that something you should have capacity to contain even without reinsuring because of the nature of the product? So again, no legislation should be read in isolation. And as a regulator, we've tried to make sure that as we've phased out the promulgation of the different regulations, there's a reason. There's a reason why capital adequacy came first.
Yeah.
There's a reason why these other ones are coming up at the time where capital adequacy comes to an end.
Yeah.
It's because each one is feeding into the other. And so, like I mentioned, when it comes to your capital adequacy and the different charges, you need to start rethinking the way you actually do business. Okay. So the risks associated with taking on reinsuring with certain companies, reinsuring certain lines of business, is it now more profitable to just contain the risk? So looking at the Act itself as well, the regulations also pave the way for the designation of the National Reinsurance Company. That's in the hands of the minister to do, and they were still waiting for that designation to take place. But then what does that bring to the market in terms of business? There's a mandatory requirement in terms of how much is ceded to the National Reinsurance Company. And so the risks that you're looking at is in terms of how does the decisions around reinsurance affect your capital adequacy? How does it affect your capacity to take on risk? The regulations also bring in issues around co-insurance and reinsurance risk pools. So we're looking to see a lot more agreements along those lines because it may work better if you come together as a group of insurers to take on a larger risk, as opposed to thinking you're a lone wolf. Yeah, so looking at a lot more collaboration, and what does that look like in terms of entities doing that? What do you look at for the other companies you are in agreement with? Are you just going to go for any single one, or are there certain things you're going to look for? Again, we've got regulations coming out requiring insurers to publish on a quarterly basis their financials. So you're seeing that everything is flowing into each other, and you're seeing that the different things are actually ensuring that as a whole the industry is more resilient.
Okay. Great. I like what you have stated in terms of how that each of the regulation is feeding off the other.
Yeah.
I remember, I think the initial one that was part of was the raising of the initial capital.
Yes.
For insurers, brokers, reinsurers, and that was the beginning. And then there came the issue of the new solvency regulations, the capital adequacy ratios, and the regulation which the transition period which ended in as of December. I think everything pushing in there. So with all these coming up, the pronouncements, the enactments, do you think this regulation, the reinsurance regulation, SI number 72, could be a turning point for the credibility of the insurance industry in Zambia?
Definitely, because and you have to understand that a lot of these legislative interventions are long-term in nature in terms of seeing the real fruit of it. So you won't necessarily begin to see it this year, but in 3 to 5 years you'll begin to see. We are expecting a lot more resilient insurance companies taking the fore. We're also looking at ensuring that Zambia becomes more competitive, even internationally. Raising our capital adequacy was such that, yes, we want to become more competitive. We want our insurance companies to be able to compete with foreign companies, even in the other countries. We're looking at these specific regulations also bolstering up our reinsurance industry. We do have 5 entities currently. With the size of our industry, that's a good number. But also in terms of the business that they hold, majority of them hold a lot of foreign business, looking to increase the local business that they take up as well. So on both the primary and the secondary front, we're expecting these regulations to build resilience and build capacity of risk.
Okay, great. Something comes up, I think, when you talk about building resilience, and something that you mentioned in terms of us competing at a global platform, which I think for a long time has not been been the case. And I like it when you bring in the regulation where you're saying it's meant to drive us to build capacity, resilience to the level where you can compete at a global level, because what that means that we're looking forward to a time when we're going to have more insurance inflows, premiums, as opposed from taking from Zambia to outside, but where to be more from outside to inside. Because I think there's some times where you find that certain business, it's from within Zambia, but if you're getting a share as a reinsurer, it has to come from outside. So I like it when you talk about that in terms of now how can we take up the driving seat, ensure that we are also competing at that level. I think it's a good one and something that has to be commended. Then also just to ask, to advise insurance players in the market, how can they take advantage of this regulation?
I think it's easier to convince your boards and even your shareholders that doing local business is actually profitable. There are also different ways that foreign reinsurers do business. The authority is aware of some of the tactics that are used. But we're hoping with these regulations, with making it a requirement under the law, it's easier to convince your powers that be to do business in a certain way. So I think for the reinsurers, more so the management, this is an opportunity to transform the way they do business and do it in a way that promotes the growth of the local industry. And so looking at yourself as not just, yes, obviously you want to create and make profits for your shareholders. That's an obvious fact. But beyond yourselves, you're looking at the growth of the whole industry. So I think if you see yourself as playing a part in that, this is a great opportunity for you to transform the way you actually do business.
Okay, great. I like it. And anything to build the local. I'm so passionate about the local market, the Zambian market, and anything to do with building and adding to there. I think I'm excited about it, and I like what you have brought in with regards to remodeling and changing some of the things, how we have done things in the past. I think some practices have not been not adding value. There have been more of taking from us. But I think once we begin to see it from the angle now of it's actually giving. It's actually can make me more profitable.
Exactly.
If I write more profitable business, I do sharing and so on and so forth. As we labor to draw to the end of this podcast, Councillor Naomie, I want just to share your final thoughts with the insurance industry, some of the things that have to, some of the things that the regulator is doing in terms of enforcing this regulation. I think it's key that we know that. Yes.
Very
key.
That,
the law. And the enforcement.
It's always important that when you make something mandatory, it's important for somebody to know the repercussions should you not. Should you not do it. Like I earlier mentioned, when you look at any piece of legislation, you can't read it in isolation. So the regulations are stemming from the Insurance Act 2021. Basically, you won't see in the regulations certain offenses or fines being administered because that's not where it happens. It happens in the Act. So we've got a part of the Act that we call the supervisory action, or it is called supervisory action. And so abrogation of our regulations triggers supervisory action. Section 121 of the Act provides a long list of things that the authority can implement, everything from suspension and cancellation of a license, taking possession, removal of a board, and removal of management, or requiring certain undertakings to be made by the management or board. So the list is long. Even public shaming is one of the issues that we can take on board. So basically, that's how you look at it in terms of how the authority intends to enforce those regulations. But I must emphasize that we do have our own, what we call an intervention ladder, which determines which intervention that we're going to enforce, dependent on the level of abrogation that the entity has. Everything from even mitigating and escalating factors. So if it's a contravention that has happened several times, obviously that gets a harsher punishment than one that's a first offender. It's more an offense of submitting a reinsurance program late is smaller than one where you are ceding a mandatory product or insurance line outside of the Republic. So it really depends on the level of or the impact of that contravention that will determine the intervention that the authority does implement. But I always find it funny when people always ask about what is the enforcement mechanisms looking like, because are you planning to contravene? So the key should be, walk on the straight and narrow, and there won't be a need to know how the authority enforces. Yeah.
Great. Thank you so much for that clarity. It's also important. Then just to ask also, how open is your office in case insurance players want to approach to get more clarity on interpretation, some gray areas? Is your office that open?
Oh, very much so. You should be aware of this. The authority is always very open. We've actually got a number of entities who have already gotten in touch with us to do specific engagements with their staff concerning not just this regulation, even other regulations. Even in terms of last year, our main focus was around solvency. So we had, other than the clinics we had for the whole industry, we sat down with specific or entity by entity, looking at their individual books and looking at what changes they need to implement. So the authority is very open. Our goal is not to shut down business. Our goal, again, is to make the businesses more resilient. And that means that it works to our advantage, to walk along with the industry to make sure that they actually do everything that's necessary to make them conform to all the regulations.
Great. Thank you so much. Dear viewers, there you have it. Today I was joined by Naomie Pilula, Manager Legal Services, Pension and Insurance Authority. Once again, thank you so much for coming through to have with us this interactive discussion. And there you have it. It's here to stay. It has come to build resilience, to ensure that the local market has built capacity, ensure that more business is retained, more income, and ensure that at the end of the day, the nation of Zambia benefits. So thank you so much for joining us. We wish you a good day. Thank you.
Thank you.